Okay. Now, in the fluctuating capital method, we used to prepare just one account by the name of partner's capital account, and in that account, we used to record everything relating to the partner, whether it is the opening balance, closing balance, interest on capital, interest on drawing, salary, commission, everything is recorded at one single place, which is called the partner's capital account. But in this case, under the fixed capital method, we prepare two separate accounts. One is called the partner's capital account, and then the other one is called the partner's current account. Now, partner's capital account just record the balances, like the opening balances of the opening capital balances of the partner, and if further addition or the further amount has been introduced by way of capital by the partners, then such amount will be recorded in the partner's capital account. And if there are if certain amount has been withdrawn out of the firm by any of the partners, then the drawing will also be recorded there in the partner's capital account. Okay, so transaction relating to introduction and withdrawal of capital are recorded in the capital account, and rest of the transactions are recorded in the current account, like the rest of the transaction means or transaction relating to salary, interest, commission, interest on drawing, every other thing will be recorded in the current account. I hope this is clear, everyone. Now, this is the format for the partner's capital account. As you can see on the credit side, we start with the opening balances of the partner, which will be there in the question. And if further addition has been made, then such addition will be indicated on the credit side of the partner's capital account by the name of by cash on the credit side. And if any amount has been withdrawn out of drawing, see, if any amount is being withdrawn by the partner but out of the capital only, then such amount need to be recorded on the debit side of the partner's capital account. But if the drawings are not made out of capital, instead the drawings are being made out of profit, then in such a situation, such drawing will not be recorded in the partner's capital account. Instead, that will be recorded in the current account. Got it, everyone? So basically, when it comes to the partner's capital account, we record only four items in the partner's capital account if we are following the fixed capital method: opening balance, closing balance, any addition made to capital, and the amount of drawing if drawing were made out of capital. Then we prepare the current account, wherein we start with the current account opening balances, which will be there in the question. If it is given in the question, then only we'll write the opening balance of the current account. If it is not there in the question, we will assume that there is no opening current account balance. So we'll keep it, we'll skip that point. It's skip this entry. After that, any other payment made to the partner, whether it is by way of salary, commission, interest on capital, or the amount of profit that have occurred that we basically found out through P&L appropriation, everything will be recorded on the credit side. And on the debit side of the partner's capital account, first of all, we'll record the drawing if made by the partner out of profit. Got it? If the drawings were made out of the capital, then it won't be recorded in the current account. And on such drawing, the interest will be charged, and that interest will reduce the amount of capital balances for the partner. Therefore, it should be recorded on the debit side. Now, when it comes to the recording of the interest on drawing will be recorded in the partner's current account only whether the drawing have been made out of profit or capital. That is not important at all. Interest on drawing will always be recorded in the partner's current account. Got it, everyone? I hope this point is clear, everybody. The format of the current and capital account is clear, everyone. Anyone is having any difficulty understanding anything in the format or the definition or any other thing? Is everything clear, Alexander, Halima, and Mary?
Yes. Yes, sir. It's clear.
All right, then. So that means we can start with the question now. So we'll be starting with this question. Let me first of all read this question for you, and you will be preparing the I mean, you will be solving this question. I'm not going to solve the question for you. But yeah, obviously, if you will be having difficulty solving it, I'll definitely help you out. But since you already know how to prepare the capital account and the P&L appropriation, everything, you have somewhat idea about the formation of everything, I think you'll be able to prepare the capital account and the P&L appropriation account for this question. Anyways, let me read this question for you. It says A, B, and C are partners. There are three partners who are sharing the profit and loss in the ratio of 1/2, 3/10, and 1/5. Okay, since the ratio, since it is not the basis of the ratio is not equal. First of all, we'll have to equalize their basis. I'm sure everybody is able to recall the concept relating to equalizing the ratios. I think you will be able to do that. After providing for interest 5% on their respective capital, so partners will be getting interest on capital at the rate of 5%, allowing B and C salary. Okay, apart from interest on capital, B and C will also be getting the salary. During the year ended 31st of March 2021, A has withdrawn 10,000 and B and C, in addition to their salaries, have drawn 2,500 and 1,000. So that means if all of the partners have withdrawn, A have withdrawn 10,000, B and C have withdrawn 2,500 and 1,000 respectively. Profit and loss for the year is already given. It's 45,000. On 1st of April, the balance is in the current account. Okay, so this time the current account balance is also there. 4,500, 1,500, 1,000. Interest is not charged on drawing or current account balance. Okay, so question specifically mentioned that we don't have to charge any interest on drawing. So partners capital account and current account as at 31st March 2021 after the division of the profit in accordance with the partnership. Okay. Okay, so the thing is that you basically required to prepare the partner's capital account and current account. But since the division of profit is not specifically given in the question, so you will have to prepare the P&L appropriation account in this question as well. Why? Because you will have to figure out the profit by which the partner's capital account will be credited. So in order to determine the divisible profit and the amount of profit which will be transferred to the partner's capital account, for that purpose you will have to prepare the profit and loss appropriation account. All right, got it everyone? So basically the thing is that you need to prepare three accounts in this question. First of all, P&L appropriation account to determine the profit of the partners. Then partner's capital account. After that, partner's current account. So just tell me whether do you think you'll be able to do it or not, Halima, Mariam, Alexander. I think all of you, if you'll try, I think you will be able to do that. Halima have
Yes,
already given a thumbs up. Mariam, I'm expecting that you will also be able to solve it. So I want all of you to try this question. All right, I'm giving you 10-12 minutes or take around 15 minutes. It will take around 15 minutes to solve. So kindly solve this question within 15 minutes. Do it quickly. Done, everyone? Alexander, Halima, Mariam.
So 1 minute.
Done with the P&L appropriation?
Yes, sir.
Okay, could you please tell me the profit you have got? Divisible profit for the partners?
So 30,000.
Yes. So, yeah, that is right. P&L appropriation is correct. So, every one of you who have got the divisible profit is 30,000. That is right. After that, you need to prepare the capital account for the partners, right? And since we are following the fixed capital approach, so we'll prepare the capital account first and then we'll prepare the current account. So I guess you must have prepared the capital account until now, Alexander.
Yes, sir. I'm in the current
So,
account.
okay. So this is how you prepared the capital account. Just a second. I think I did not prepare the capital account for the question. Anyways, you tell me the total balancing, total of the debit side and credit side for the partner's capital account quickly. Tell me the total balance of the capital account, Alexander.
So the closing balance.
Yeah, tell me the closing balance.
Sir, that in the solution there is additional cash. I didn't put that in the account.
Just a second. There is no addition made during the year, no? Is there any further capital introduced?
No, sir, but the format you showed had it.
Yeah. So, in the format, everything is there, and depending on the question, you will be writing the component because, as per the question, no addition has been made by the partners, so we don't have to write that component.
Okay, sir. Sir, so then the closing balance will be the same as opening balance.
Yeah, because no drawings. Is there any drawings that has been made? No. The, uh, the, the drawing is given in the question, but we'll presume that this drawing is made out of profit. Why? Because if you're able to recall, while covering this topic, I've specifically mentioned that whenever drawing is made out of capital, then only it will be recorded in the capital account. Otherwise, it will always be there in the current account. So we won't be writing down the value of the drawings made by the partners in the capital account. Rather, we'll show the amount of drawing in the current account. Is that clear to you?
Yes, sir, clear.
Okay. Quickly prepare the current account and let me know the closing balance of the current account, everyone. Mariam and Halima, I want you to share the answer with me in the chat section if you already got the answer for the current account. Tell me the closing balance of the current account quickly. Done, everyone. You are taking too long to
Sir,
just solve
just,
one.
sir, just 1 second calculating. I will tell now.
Finish it quickly.
Done, sir.
Done. Okay. Could you please tell me the closing balances we have got?
Yes, sir. A will get 12,000, B 9,500, C 7,000.
Okay. I want the confirmation from Halima, Mariam. Just confirm whether all of you are getting the same answer or not.
A is 12,000, but what was B? I didn't hear that.
Could you please repeat, Alexander?
9,500.
Okay. Yeah. For the B, it will be 9,500, Halima. Did you get 9,500 as well? Okay. Because no one else is responding, I'm presuming that you did the question correctly, Alexander. I will move to the next question. Just a moment. Okay, we have a few more questions based on the fixed capital method, which I think you'll be able to solve on your own, since I have already shared the PDF of the chapter, and I'm sure everyone would have got the PDF of the chapter. I think all of you will be able to try the rest of the question based on the fixed capital method on your own. So I'm moving to the next topic. All right, I'm not solving any other question based on the fixed capital method. But yeah, this method is very important. I would recommend that all of you to at least try 2-3 questions based on this method as well. Now we'll talk about just a minute. Okay, now we'll talk about the calculation of interest on capital. But before that, just wanted to confirm if whether every one of you have got the PDF of the chapter or not. Alexander, Halima, Mariam, all of you got the PDF of the chapter? Halima have given thumbs up. Okay, so I'm presuming that everyone have got the PDF. Alexander, you got it?
Yes, sir. I think so.
Okay. So if you have the PDF, so we'll talk about the calculation of interest on capital now. And for that, we'll just start with a question directly. Question number 32. Okay. All right, everyone. So I want all of you to take either you take the screenshot or just open the PDF that I have shared with you. Question number 32 we'll be discussing. And it says Amit and Bramit started business on 1st of April 2020 with a capital of 15 lakh and 9 lakh respectively. On 1st of October 2020, they decided their capital should be rupees 12 lakh each. Okay. So they have started business with a capital of 15 and 9 lakh, but after some time they have decided to basically fix their capital at 12 lakh each. The necessary adjustment in capital were made by introducing or withdrawing by check. Interest on capital is allowed at 8% per annum. Compute interest on capital for the year ended 31st of March 2021. I hope the question is clear, everybody. At the beginning of the year, the capital balances were 15 lakh and 9 lakh. Later, the partners have mutually decided that they will be maintaining a capital balance of 12 lakh each. And if their capital exceed 12 lakh, the excess amount can be withdrawn by the partner. And but if there is some deficit in the capital, then such extra amount needs to be contributed by the partner. Okay, and partner will be entitled to claim 8% interest on the capital as well on yearly basis. So in order to find out the interest on capital in this question, what we'll do, we'll find out the interest on capital like this. Just a moment. Let me solve this question for you. Now see, in this question, at the beginning of the year, capital balances of both the partners were, for A and B, it was 15 lakh, right? And 9 lakh. And later on, 1st of October 2019, at the middle of the year, partners have decided to fix their capital at 12 lakh each. Got it? Now, we need to calculate interest on capital at the rate of 8% per annum. Now, you have to tell me that starting from April, 1st of April, till the 1st of October or 30th September, just a second, give me a moment. Yeah, starting from 1st of April till 30th September, all the partners, both the partners have maintained a capital balance of 15 lakh and 9 lakh. Is that right? So they will be entitled to claim interest on this value of capital, yes or no? And after the period of 30th September or from 1st of October onwards till the 31st of March, they will be getting the interest on capital upon this balance. Is that right? Is that clear, everyone?
Yes, sir.
Yes.
Okay. So in order to do the calculation of interest on capital, what we'll do will simply, let me show you the solution. We'll first of all calculate interest at the rate 8% per annum on 15 lakh into 6 by 12 for the 6-month period, and for the rest of the month we calculate 8% interest on 12 lakh. Everyone is able to understand this? We will first of all calculate in respect of partner A. The partner A will calculate the interest on 15 lakh into 8% for the first 6 months, and then again we'll calculate 8% interest on the 12 lakh at the rate of 8% for the remaining 6-month period. Same thing we'll do for the B as well. We'll calculate interest for the first 6 months on 9 lakh into 8% into 6 by 12, right? And adding interest on 12 lakh at the rate of 8% for the rest of the year. Got it? Everyone, is this clear? Yes or no? So this way you will be getting partners A interest will be 1,08,000 and partner B interest will be 84,000. I'm sure everyone is able to understand this. Kindly confirm if this is clear or not. Alexander, is that clear?
Could you explain one more time?
Yeah, sure. See, first of all, Alexander, pay attention to the question. What it says, first of all, see, understand the requirement of the question. It says we need to find out the interest on capital for the entire year. Okay, but for that purpose, we have to basically we have to know the capital balance that partners have maintained throughout the year, right? Only then we will be able to determine the interest on capital. Now, reading the question, it says that at the beginning of the year, that is on 1st of April, both the partners have opening capital balance at the rate of 15 lakh and 9 lakh. right? But in the middle of the year, on 1st of October 2020, both of them mutually decided to basically maintain the balance at 12 lakh. So earlier, partner A was maintaining a capital balance of 15 lakh. Now he have to maintain a capital balance of 12 lakh. Similarly, Bramit, who was maintaining a capital balance of 9 lakh, partners have decided that he will be maintaining a capital balance of 12 lakh as well. Got it? So this is important for us. Now, see, let me explain the entire thing one more time. Let's suppose this is one complete year. Got it? So on 1st of April, the opening capital balance of both the partners, Amit and Pramit, was how much? It was 15 lakhs and 9 lakhs. Okay, what do we usually do? We pay the interest on this value. Interest on capital is paid on the balance, opening capital balance of the partner. But since the capital balances change in the middle of the year, in the middle of the year, they have decided to maintain a different balance. Okay, so from 1st of October onwards, both the partners will be maintaining a capital balance of 12 lakh each. Okay, and this balance will be maintained for the rest of the year. That means till 31st of March, both the partners will be maintaining capital balance of 12 lakh. Now, in order to find out the interest, let's first of all talk about Amit. How much interest will be paid to Amit? So, Amit, first of all, you'll have to pay 8% interest on 15 lakhs of capital balance that he has maintained for the 6-month period in the business. For the first 6-month period, for this period, he maintained a capital balance of 15 lakh, for which he is entitled to claim 8% interest, right? And for the rest of the year, he maintained a capital balance of only 12 lakh. So he will be getting 8% interest on 12 lakh for the remaining 6-month period. Got it? So now when you will total it, when you will calculate it and total it, you will find that sum total of this will be 1,08,000. Is it clear to you now?
Yes, sir, it's clear.
And for same thing will be done for the B. B initially have maintained a capital balance of 9 lakh. So he will be entitled to claim interest on 9 lakh for the 6-month period at the rate of 8% per annum. And for the remaining period, he will be claiming 8% interest on the 12 lakhs for the remaining 6-month period. Okay. And he will be getting, it was how much it was? It was 84,000. I hope this is clear to you now.
Yes, sir, it's clear.
Okay. All right. Now, see, always remember that we have to basically calculate interest on the opening capital balance. All right. So keeping that in mind, we'll discuss one more question. This is question number 33. It says Ram and Mohan are partners in a business. Their capital balances at the end of the year. At the end of the year is given as 24,000 and 18,000 respectively. During the year 2015, Ram have made a drawing. Ram's drawing and Mohan's drawing were 44,000 and 6,000 respectively. All right, and profit before charging interest on capital is given 16,000. We need to calculate interest on capital. Okay, so what is the problem in this question? Problem in this question is that this time we are not provided with the opening capital balance of the partner. Rather, we have the closing capital balance of the partner is given. To find out the profit for the question, find out the profit in this question, what we'll do, we will have to calculate the opening capital balance of the partner. All right, Alexander, is that clear to you?
Yes, sir.
Okay, so in order to find out the opening capital balance, there is a formula that will be applied to determine the opening capital. on which the interest will be charged. And the formula is very simple. First of all, we'll take the value of the closing capital and we will add the amount of drawing made by the partners, and we will then subtract the amount of profit that they have earned in the partnership. And by subtracting it, they will get the opening capital balance of the partner. So like in this question, opening capital balances, closing capital balance of the partners were 24,000 and 18,000. Got it? And after that, we will add the amount of drawing in it, which will be 4,000 and 6,000, and subtract the amount of profit. So profit is given in the question. Yes, profit is given in the question. Profit is given in the question of 16,000. And since our profit sharing ratio is not given in the question, so we'll presume that both the partners are equal partners and they must have shared the profit equally. Therefore, we'll subtract the profit from their closing capital in the equal proportion, 8,000, 8,000. And this way, by subtracting profit and adding the amount of drawing in the closing capital, we'll get the opening capital balance. So you have to remember the formula. To find out the opening capital balance, what do? We take the value of the closing capital and drawings in it, subtract the amount of profit. This way, we'll get the opening capital. And on opening capital, we can now calculate the interest at the specified rate given in the question. The rate of interest given in the question is 5% per annum. So we'll calculate interest on 20,000 opening capital of RAM into 5%, that will be 1,000. And same thing will be done for the Mohan as well, 16,000 into 5%, that is 800. Done. This is it. This is the answer for this question. I hope this is clear, everyone.
Yes, sir.
Yes.
But before there was in the format it was like add drawings and minus additional capital introduced, something like that.
Yeah, that can also be done. If there is some additional capital, that can also be subtracted.
Okay, sir.
Like in this question, there was no information regarding the additional capital, so therefore we did not subtracted anything like the additional capital. But if it is there in the question, somehow we need to figure out the opening capital balance. At the beginning of the year, what was the balance? So to reach that point, what we'll do, whatever the amount of drawing that has been made by the partner throughout the year, we'll simply add that amount to reach the opening capital balance. And the profit that we have added at the end of the year, we will also subtract that profit so that we can get the opening capital balance. But if there is some information regarding the additional capital introduced by the partner, then such value should also be deducted. By only then we will be able to determine the opening capital balance. So therefore, we will subtract that as well. I hope this is clear now.
Yes, sir. It's clear now.
Okay. Now, see, this is a question wherein what does it says? Yeah, we need to calculate the interest on capital in this question as well. Now the capital balances are given in the question. This is the closing balance sheet prepared as on 31st of March. So the balances long capital balance and short capital balance given in the balance sheet will be considered as the closing capital balance of the partner. Alright. And the amount of drawing is also given in the question, long and short. Profit is also there, out of which 1 lakh has been transferred to the general reserve. So what we need to do, we'll simply add the amount of drawing and subtract the amount of profit. We'll get the closing capital, and this way it will be done. See, since out of profit, 1 lakh has already been transferred to reserve, that means only 15,000 must have been distributed among the partners. No? Out of 1,50,000, 50,000 has already been transferred to reserve. Then how much must have been transferred among the partners? 50,000. So only 50,000 can be deducted out of at the time of calculating the closing capital. Is that right?
Yes,
Is
sir.
that right? Okay. So closing capital, adding drawing, subtracting profit, we'll get the opening capital, and on opening capital, we'll start 8% interest for both the partners. I hope this is clear as well.
Yes, sir.
Okay. So I think you can try the rest of the question from this topic. Now, after this, we have the next topic, which is guarantee of profit. The partners will talk about this in the next session. It would be better if you yourself revise this topic once before attending the session, so that it will be easier for you to ask the. You will have the clarity about your doubts. You can ask me the doubts directly instead of discussing the entire topic, because discussing the entire thing is not possible. We won't be able to revise and complete everything if we just go topic by topic and doing question by question. If we cannot just discuss every question. I hope all of you understand that. So therefore, I just shared the PDF of this topic.